Hi, Peter Rose, Longwood Currency Trading. I want to talk today about the difference in pausing in your Forex trading versus sitting on your hands. Sitting on your hands is like a takeoff on Jesse Livermore's comment in his book. It never was my thinking that made big money for me. It was always my sitting. And so I've done other videos and some blog posts where I talk about that quote, and I talk about that sitting on your hands is still trading. But there is a difference between doing that and pausing in your trading. And so that's the kind of what I would like to chat with you about today. But first, a little travelogue with Peter Rose. This part of New England in the Lakes region in Hampshire just had our first winter nor'easter, and it was a beaut. Some of the flatland areas around us, they're not really flat, but they are far lower than where I'm at 960 feet above sea level on the mountain here. Anyway, some of the lower areas got 3.5 inches of snow. It was a bad storm down there. There was a lot of wind and stuff. But up here, we got we got 19 inches in the yard anyway, and I've stepped into places where I was shoveling the other day that was 2 feet. I mean, you know, that's a lot of snow. So this is a couple of days after the storm, and so just go outside and take a look at what's going on out here. And my wife just walked out to take the bow dog for a walk. So I've got my coffee and I'm all set to go here on this topic. I think we're all familiar with Livermore's concept of sitting. I've done videos, I term this anticipatory trades, avoiding anticipatory trades by sitting on your hands, by just sitting. An anticipatory trade is you think the price is going to do something, and you're hoping that it will, and you've got a profit target in mind, and so you go, gee, if I get on board the train right now, I'll get an extra 5 pips or 10 pips or whatever it is, because I'm pretty sure that it's going to go to my profit target. That's an anticipatory trade. Very rarely do they work out. So you kind of have to just wait until price comes to you, to your optimum take point for your entry, and then manage your trade rather than trying to manage an anticipatory trade. So that's one version of sitting, or sitting on your hands. The other would simply be, you come in and you look at the chart on it's Monday and you don't see anything, and so you go and I don't know, play racquetball or something, and come back the next day and you sit there and there's really nothing going on, or you see something brewing, but you're going to wait on that. That's that thing that Livermore is talking about. If there's nothing there, don't try to create something. It's not quite the anticipatory trade thing where you're hunched over the screen and and you're this is going to go. I'm ready to go. This is more of a waiting type of sitting where there's just nothing there that would indicate price is going to move in any direction, or maybe there's a lot of chop at the time going on and you decide that you don't want to, or you think maybe price is in some kind of a blow off stage, whether that's upward or downward, and you're just going to wait until the price action stabilizes enough for you to determine what your risk is for getting into the trade at that time. That's the sitting part. But there's also pausing your trading. And that's a conscious decision that says, I'm not going to trade anymore for a while. Now you may do this when you get hit with a drawdown. I've done this. I'm just coming out of a long period of pausing in my trading. Not so much because of depression or anything. I'm stupid. I realize it. I took a bad hit and it's my fault. But it was bad enough that to punish myself, I just decided I'm not going to do any trading until this thing either rolls around. Just a small mini account. So I was just doing some investigative work at the beginning of the year, and I was up like, I don't know, 60% in 3 months, and just lost attention to what I was doing as we got toward the mid part of the year, and got involved in a real estate transaction that we're trying to put my final property up for sale, and so I got involved in that and lost interest in the trade that was running, and just said I'm just not going to trade anymore until I get through this real estate thing. And then I got through that, and I just said, yeah, I'm just gonna pause. I'm not going to trade for a while, and it isn't because I lack any confidence or whatever. I'm rearranging the funds from that real estate transfer, so I've got a 6-figure account now. But that doesn't mean that because I have money in the account that I should be trading if I don't feel like it, or if, in my case, I just think prices in the currency pair that I follow is not moving in the direction that it probably should, based on the economic and the fundamentals of things. There's so many things going on in the world today: the Brexit situation, the U.S. pandemic, we just got through elections, the EU is going through a lot of issues and stuff, and so there is a lot of uncertainty in the world. I don't trade or do anything when there is uncertainty. That's just my nature. I did that in real estate. Real estate was good. I bought, and I mean, not dozens of properties, but I bought a few properties in a short period of time. I realized the market was accelerating very quickly, and I just said, I'm going to wait. The market took off. I probably would have made a ton more money, but then there was a correction that came back 30%, would have brought me back to basically where I was when I bought the thing anyway. So I lost equity, but I didn't lose any of my base because I paused. I waited. And as I've said it many times on this channel, I've lost $1 million twice in my life, but I made it back each time, and that was because I paused when things got volatile. And so rather than getting involved in a trade and then having the market come back against me and then I go into negative, I just would hold when the market showed me that I should hold, and I just was content with where I was. And I've seen real estate prices take a 40% hit from their highs and bringing them down to where my mortgage level was. So I lost net worth, but I didn't lose the base of the asset itself. And that's very difficult to do in, in currencies. You can't afford to do that because there's no, unless you're really fundamentally oriented and you really understand the economics of the two countries that you're dealing with, and you can second guess what the national banking systems are going to do, which you can't. Even the pros can't do that. You're best just to sit on the sidelines during periods of that, as opposed to saying, well, I've got a trend in this particular direction, and so I'm only going to trade in the direction of that trend. But too often than not, I've seen that in times of extreme volatility and uncertainty, that trend can turn around. There could be a pivot point. You'd be on the other trend real quick, faster than you can imagine. And then your belief system, gets corrupted, and you get directionally biased, which is what happens to me many times if I'm stupid enough to be trading during periods of time like that, rather than pausing. That price will swing around, and you go, well, this is just a correction. It's not a swing, it's a correction. And it isn't. It's not a correction. It's the price is swung around, and now you're on a long-term trend. And that trend can go, 600-800 pips before you start to see it start to chatter again. So, but you could say, well, once the trend has proved itself, then you should be able to reverse your mindset and do it the other way. And you can when you have more experience. I lost a lot of money in my first real account, $50,000. And I learned an awful lot of stuff when I came back. And I trade one currency pair. I trade during a specific time. I have some very specific, simple rules. I take an 8 pips, a hard stop loss. There's a lot of things that I do to simplify my trading. And one of the things that I found that suits my personality is I'm a short biased trader. I have a physics background, and I know things fall faster than they go up, and they fall harder when they fall. And so that's what gives me my short bias. So I'm looking for short trades during these longer term rising trends. And when I see that they don't exist, I don't trade. I don't go to the long side because I haven't spent my career being a long and a short trader. I make all my money on the short side. I think 99% of the long trades that I have taken, I've lost money. And that just simply could be because I was doing that before I had codified my rules. I'd be more apt now to go in and in an established environment where I thought things were going to go up. I would go to the long side. But then I've got more experience now, and I know stuff. But as a beginning trader, no, I don't. I think you just keep things as simple as you can. And one of the simplest things that you can do is not sit on your hands, but pause your trading. Step back from it. Don't do it. Go on vacation. Don't do it. Have a cup of coffee. It's more than having a cup of coffee and waiting for something to happen. It's don't even turn your trading platform on. And not because you're depressed because you did a bad trade, or because you're fearful that you did this tremendous big trade and you've got all this money that now you don't need to trade for a while because the thing is certain to turn against you. You're not pausing against something, you're pausing for something. Now there's a big difference in that. And I'm pausing for something, and I hope you get the difference in understanding that pausing is trading. Just like sitting on your hands, as I have explained before, that's trading as well. Pausing is something that you choose to do out of the happiness in your heart, that you're satisfied with what you're doing, that you don't need to be in the market, and that there are other things that you may want to do. One of the things, for example, I've done in the last couple of months is I've read 6 books. A couple of them have been trading books. Schwager's new book, Unknown Market Wizards. I've just finished reading that. So I don't want to be trying to enjoy my books and playing with my dog and worrying about my trading, even though I'm flat at the end of the day in my trading. I don't want to fool with it. I don't have to trade. When I was trading the small account, when I was trading the large account, I was trading to make money, and you can't do that. You have to trade out of the love of the thing, and you have to have your rules down and all that stuff. When I went back and traded the small account, I was trading for principles and to learn. And as I've mentioned before, I had $5,000 left after my debacle, and so I ran that 5,000 to 9,400 or something like that in 5 months, or a little less than 5 months or something. So just to solidify my rules and things. And then I got into I thought, well, let me go back to because $5,000 account, you're trading 5 minis, it's a half a full. And so, it's pizza money, for sure, more than that. So there's some monetary concerns there. And so I thought, well, I'll trade $1,000 account, which is sort of a pause. I'll trade $1,000 one mini lot where I'm trading $1 a point, so that I'm not concerned about the money. I'm going to just do principle-based trading, and I'm going to do my rules so that I'm only concerned with evaluating my trades on a pip basis instead of a dollar basis, because the dollar doesn't matter. And as I've said many times and admitted to you, I was a miserable failure trading a mini lot because I'm a real estate investor. I'm used to dealing with hundreds of thousands of dollars and making decisions that are $20,000 at a pop. So the fact that I lose $20, which is 2%, or I lose $50, which is 5% on that account. It doesn't mean anything. It's like I've done videos before. Don't trade for a pizza, and I just didn't care. Now, I get shit from that. You should be disciplined enough. You should be able to trade for $1 a point as well as for $100 a point. Well, I can't. It's not my fucking personality. Okay, I don't give a shit. And so that's another reason I've been on pause, because I was waiting to not only fund my account with money from proceeds from the sale of the real estate, but also because I just don't like this environment, and I don't need to trade. I'm retired. I've got investments, from my real estate career. I've sold all my stocks off. I'm sitting in cash. Everything is cash because I'm uncertain about what the market is going to do. I'm going to wait until probably February, into the first quarter of next year, before I do any serious trading. I don't have to trade. I don't want to get wound around the axle and make the trading stressful. I enjoy trading, and I've got an account big enough now so that when I make the right decisions, I make a lot of dollars as a result of that. And I'm doing fine the way it is, so I don't need to make $100,000 a year. It's going to be fun for me. And when I was trading before on the $5,000, that was fun. And so I was able to, to do really good on that. So I will get back into the realm of things with that larger account. I'll probably trade a smaller section of it, maybe just a $5,000 or $10,000, maybe a $25,000 account for a while, just to get back into the swing, and before I reload into the larger account. We'll follow along with this as we go through, but I'm pausing in my trading, and that's a wonderful thing because I can enjoy my coffee. Peter Rose, Longwood Currency Trading. Have a great day, and have a great trading day.